Hello, everybody. How's everybody doing? My voice is kind of gone. We had PT yesterday with the group, and we're playing basketball or combat basketball, whatever you want to call it, and got out of hand as always. So we're yelling around, and I lost my voice yesterday. It's coming back, so if I sound kind of gruffy, that's why. It's Saturday morning here, 3:49 a.m. I like to say that in Okinawa, Japan. One day I won't be. Thank goodness for that. So today we're going to talk about your first 5 dividend stocks. All right, starting a dividend portfolio, the hardest part is picking your first 5 stocks. Okay, so I wrote an article, book, free download on the Military Family Investing website. Also, you can buy on Amazon. There's a paperback for that as well if you want to get into that. Anywho, let's get started. Let's jump right into it. First, let's start with, so if you see me looking down, I wrote notes, okay? So don't hold me hostage. All right, 3 types of portfolios. All right, so I break down the 3 types of portfolios to simplify it. Over the years, I've been dabbling into all of them. I have all 3 just so, because they're all there for different purposes. All right, so the first type is an index fund portfolio. So I focus on my 4 favorite index funds. And index fund portfolio is a little different, right? It's for purely growth, which is good until you get to the end because it doesn't pay you much. So say you have $1 million in index funds, you got there pretty fast, but it's going to pay you $10,000 a year, right? So not ideal, right? So you want to use that for growth and to keep your income going above inflation, but not really for a paycheck replacement plan. Okay. Then there's dividend growth investing, which we're going to talk about today. All right. So dividend growth investing is similar, but you have higher yield, right? So instead of investing in index funds, you're doing blue chip stocks, McDonald's, Starbucks, things of that nature, right? So you get to the end, you have $1 million. It's probably going to pay you $30,000 to $40,000, right? And then my favorite is income investing. All right, so you're investing in products, high yield bonds, real estate investment trust. So with your $1 million, you're gonna be looking at somewhere between $80,000 to $100,000 a year. All right, there's certain risks with income investing, which we talk about in different videos. Now, let's focus on our dividend growth investing portfolio today. All right, so the first thing we want to do of the first 5 stocks is you want to pick a index fund. All right, so I know this is a dividend growth portfolio. This is after 3 years of experience index fund investing. You want to have an index fund in there. Okay, this ensures that your portfolio is growing with inflation, because there's no guarantee that your McDonald's, Starbucks, whatever you're investing in is going to grow as fast as you would like it. All right, so you would throw an index fund in there, and it usually yields somewhere between 8 to 10% in growth. So you throw that in there just to balance out your portfolio. You don't have to, but I have index funds in all my accounts. All right, so in March 2020, during the pandemic, and I had no index funds in my accounts, it got bloody real quick, meaning that everything went negative, right? Real quick. So once I added index funds in, it gave me more room for error. So that way, I wasn't counting on McDonald's to grow at a certain point. I was just worried about McDonald's dividend. So the 4 kinds of index funds, my 4 favorite are the Dow Jones Industrial, the NASDAQ 100. My total favorite one is the Total Stock Market Index Fund, VTI, right? And then the S&P 500. I have an article on that. I think I'll link below that spells all those out. The one thing about the Dow Jones is that it pays monthly, right? It's about a 2% yield. The NASDAQ's about a 0.5% yield. VTI is about 1.5, 1.8, and then the S&P 500 is about 1.5. So my favorite is VTI because it's easy. So when the stock market has a good day, VTI has a good day. So it goes with the flow, right? So VTI is my favorite. I put VTI across all my portfolios. I absolutely adore VTI. So when I'm starting a dividend growth or any kind of a portfolio, I start with VTI. All right, and okay, so you start with your index fund. That's your first stock. Start with one of those 4 index funds, and you should see success with those. There's really nothing. If you have a bad day, if it has a bad week, buy more, right? Because the stock market usually goes up, right? It might take a year, but it usually goes up in time. The next, stock number 2, you want a monthly dividend paying stock, right? Something that pays you every month. There's not a lot of blue chip dividend stocks that pay monthly. All right, there's one off the top of my head, and that's Realty Income, which is a red. The ticker symbol is O, right? O, the letter O, Realty Income. So if you want a monthly paying stock, O is a good one. I always put AGNIC, which is a REIT, a mortgage REIT. I put them as my monthly paying. Why do you want a monthly paying? Because it's something that you can build up, right? So that's kind of like your little income stream there. So, you know, every month hits, you know you're going to get, I know I'm going to get on the 10th, around the 10th, I'm going to get a nice payment from AGNIC every month, right? So it's good to have that monthly paying stock just so you have that kind of baseline. If you work that thing up to 100, 150 bucks every month on the 10th, you can, you know, depend on that income coming in. It's nice to have for a dividend growth, okay? So you want, the number 2 stock is you want to have a monthly paying stock. So now we have our index fund and we have a monthly paying stock. Now, you also don't necessarily have to have a stock. You can have a dividend ETF as your number 2 stock pick. All right, there's a lot of dividend ETFs that pay monthly and somewhere between 5% yield to 10% yield, whatever you want to dangle into. All right, so I do have an article on dividend ETFs, so look into that, right? And if I remember what I'm saying, I will link it into the YouTube video right now. All right, so it doesn't necessarily have to be a stock. It just could be a ETF that pays monthly. But it's good to have that monthly payment, just so you get the flow of, you know, dividend investing. And you know you can just throw money in there, and the next month you're going to have it coming out. And it's good to have that payment. All right, you also can use a closed-end fund, a monthly closed-end fund if you want. Okay, so we have our index fund and we have our monthly paying stock. Now, the last 3 will be quarterly stocks. Okay, so I have if I'm looking up, I have my chart pulled up right now. All right, so quarterly stocks. What that means is that if something pays you in January, it's also going to pay you in April, July, and October. If it pays you in February, it's going to pay you February, May, August, November. If it pays you in March, it's going to pay you March, June, September, December. Okay, so now you want to build those up as well. So over the course of your dividend growth investing, you're basically just building these up. There's many ways to do that. With my Cash App portfolio, I'm kind of just random. I'm kind of like, I look at the next month, like, okay, next month is March. I check the payment dates and the timelines. I'm like, okay, if I put money in now, I'll see it next month, right? Or you can dollar cost average into all your blue chip stocks. What I like to do for my stash account, which is my primary dividend growth investing, I put about $130 a month, or I'm sorry, a week into my stash. And I spread that across, I think it's like 20 to 25 blue chips. $2 a week into each of those, plus some other investments and VTI and things of that nature. That way I just set it and forget it. If the stock's low, it buys more. If it's high, it buys less. It's perfect. It's called dollar cost averaging. And I just do that, and slowly my portfolio goes up and up. So if I scroll down, sorry you can't see that. One day I'll get advanced and get to the point where I can show you guys. But I can look at my stash, and in January, so last month, it paid me $42. But January of 2021, it paid me $15. All right, so it's 3 times more, paying me 3 times more already. And the dividend growth, it moves slow. All right, it's not income investing. However, my portfolio has gained about 20%, the actual stock value. With income investing, you're not going to get that kind of growth, okay? So I threw in there that I want to look at some of the different blue chips off the top of my head. Well, I'm sorry, off the top of my spreadsheet, just so you know what I'm talking about, right? So for January, in my Cash App, I have Alteria, it's hard to say, which is a tobacco company. Philip Morris, which is a tobacco company. Annuity Capital, which is a mortgage REIT. And then Coca-Cola, which is obviously Coca-Cola. All right, so those are for the January, April, July, October timeframes. And I do have an article about blue chips. Again, if I remember all these things, I'll put them down below. If not, search my website. They're easy. Search for blue chip stocks and it's in there. All right, so for February, my favorite stock of all time is AT&T. All right, AT&T is going to have a dividend cut soon. Right, it's going to cut about 50% off the dividend, but it's going to give us it's splitting off into a growth stock as well. So, and with my Cash App, I have $51 dividend in AT&T this month. It was nice. So in a couple months, it'll be $25. I'll cry about it later. But $25 at 4% yield is still good. Okay. Abbey, which is a medical stock. Kinder Morgan, which is a energy stock. Ontario, I forgot the name of it. Ontario Management. Sorry, AM is a ticker symbol, but they're also energy stock. And then Verizon. We all know Verizon, which is a February payer as well. And then finally, for the March, I have Pfizer, right? Pfizer went up big time because of the pandemic. Pepsi, Visa, Walmart, and Prudential, which is one of my favorite. Prudential has about a 5% yield. It's obviously the insurance company. So those are some of the stocks. I do have a list. I still have an article on the blue chip stocks, but you want to, kind of balance those out over the different months so that you have a nice consistent payment. That's the kind of the idea is that you get paid, you get your monthly payer, say it's $30, and then you get hit with a Pepsi payment, that's $30 that month. And then over time, you start with those 5, you get the hang of it, you see what's going on, and then you'll start saying, okay, cool, I want to increase that. So I'm going to add another one to the February. So I might have AT&T, I have Verizon. Okay, so then in the March cohort, we'll say I have Pfizer. Let me add Pepsi, right? So then in the January, obviously I always start with Altiria and Philip Morrison together, but I might add Annuity Capital, which is my mortgage rate, which pays me 12% currently, right? So whatever you do, you just want to look at it's a business. You are really creating your own business. You're creating your own portfolio that pays you back. So if you take it seriously, it progresses pretty quickly. So that was basically it. So to review, we have our 5 stocks: index fund, monthly payer, then 3 quarterly payers, right? January, February, March. So I have all the research in that book. You can read that. It does have the article Blue Chip in there. So just pull down the book. That's why I like creating these quick books, because I have everything thrown in there. It's about 50 pages. You can just flip through it in 1 hour and get the information. My goal is for everybody to have 1 or 2 bits of information that stick with them per book. That's it. I mean, instead of reading a 300-page book, which you have 1 or 2 bits of information that stick with you, you can do 50 pages, pull down the book, read it, throw it away, flip it, put it on work computer, whatever you need to do, right? So that's why I like doing it. So I just wanted to make a quick announcement that my dividend tracker that I'm looking at right now, I also put up on Etsy. So I made it into an Excel spreadsheet. You also can upload it. So you download it. It costs $1. You can download it. It has all my stocks in there, all my history. All you had to do is go in there, modify it, delete what you need to delete, whatever. So everything's in there. But you can upload it to Google Docs and create it and turn it to a Google Docs. I usually keep it as a Google Doc because that's what it is. But that way, this is refined over 3 years, right? I started with doing manual entry, going down, sequential order. But now I moved to a more vertical format, and it's been easy, so easy to track. And I just add things, remove things. It keeps all my totals in there, and I can look back. Right now, I'm looking from February 2022 to November 2020, right? So, for instance, my Cash App in November 2020, in the same month, so basically the February cohort, I was $4.29. And then this month in Cash App, I have $160. All right, so roughly 14 months later, I can't even imagine how many times it multiplied, but it's a lot, right? So it's at least 25, if not 30, 32 times more money, right? Just by sticking to the plan. All right, so your first 5 dividend stocks, get started. Even if you just start with an index fund, you start with that one index fund. Index funds pay dividend as well. So even if you just start there, you'll see how the stock market goes. I say put 20 bucks, grab $100, open your Cash App, throw it across those 5 stocks, and just watch, and then you start getting your little payments coming in, and you're like, oh, hey, this is cool, right? Your payments start with $5. Then you're like, okay, I can buy ice cream. Then $10, you're like, oh, okay, I can buy McDonald's. $25, oh, wow, and then $160, and you can do a lot of stuff with $160. All right. So that being said, so the dividend trackers in the thing, I owe you guys some, so I'm talking like a military guy. I owe you guys some products at the bottom. So let me go dig through those, get those links in there. And like I said, so every weekend, I'm trying to shoot every day of the weekend. So this is a 4-day weekend. So hopefully I have 4 videos up. And I'm just basically trying to grind out and, go back all the books I've already created, all the articles I've already written, kind of explain them, give you more hands-on. That way you can read afterwards, read beforehand, and then get some more information, right? My goal is just to get the information out there. Information I never had, kind of figured out on my own via books, reading, and I do enjoy it. So with that being said, I'll see you tomorrow.